It's Market Day Report. Let's jump into the markets. We'll start with the one that's behind me right now, and that's canola. Canola futures trying to move higher after a lower trade yesterday. A little lower for the wheat, but still year over year in positive territory. It's 5% higher year over year. Rice, by the way, moving higher for the last two sessions. We're in mixed territory today, but it's in positive territory year over year, up 2%. Only one market still in the red year over year, and it's been higher the last three sessions, about to be in positive territory. It's the oats market. All right, now that we have that out of the way, this one's up 10% from where we were 12 months ago. New crop D's corn, 501.5. It's up 3 3/4 cents. This market's up 14% year over year. November, 7 cents higher, 1201 3/4. The wheat market is up 29%. Here's July, Chicago, 650 1/4. It's up 16 1/4. We're already in a 14-cent trade range here. We have hard red trading higher as well, up 18 1/4, 704.5. And then this market leads all row crops. Did you guess? Cotton up 32%, December 86.98. It's up 40 or down 42 points. Our guest in studio, Chris Swift, Swift Trading. Chris, pretty amazing. 12 months ago, I wouldn't have projected where we would be today with corn and soybeans and wheat and cotton.
No, and they're all really trying to make some kind of headway. Corn now above $5 on the new crop. Beans at 12. That's those big numbers that we like to do. And wheat above 7, especially in Kansas City, Chicago right in behind it. But each one has kind of a unique story to it as well. Soybeans, China this week. We know we're probably going to see hopefully some kind of trade deal with China on our soybeans. The corn market in a lot of the drought areas down south there, having to replant in some areas in the further west. And in wheat, probably the biggest story where we saw yesterday, another crop progress report lowered the quality of the wheat. And as we talked about off air there's just a lot of wheat that's just not going to be purposed for anything under the sun. And I think the market's now taking a good hard look at that.
So we're actually trading some fundamentals here.
Yes, over and above just the technicals and seemingly a drive to want to be in commodities. We saw the CPI this morning. Inflation is hot. Energy is continuing to keep that hot. So why not own things that tend to go up when we're like that? And grains have been underpriced probably in comparison to a lot of other markets. And now that the demand is growing, clearly we see Mexico as now our biggest importer of U.S. corn right in behind South America. Excuse me, not South America, South Korea. So we see a lot of that is taking place. We just have demand, and now we've got some supply issues.
Okay. Hey, quick break here. When we come back in a moment, we'll have more markets with Chris Swift on Market Day Report. We mentioned year over year, and this is a market just even with where we were 12 months ago. It's the hog market. Lean hogs right now in lower territory. We've got a Benjamin on the June contract. It's down 22 cents. The deferred's 45 and 60 cents lower on a market, though, trying to make it higher for the fourth straight session. This is trying to avoid a lower close for the fourth straight session. Talking feeders. August, 362.82. It's 52 higher, 55 higher now. The May contract yesterday was actually higher, and we've just reversed what each one of those are doing. Then we get over to the live cattle. Fat cattle, 165 higher on the June, 251.05 in the August, 244 1/4. It's up 70. Not really convinced that cash trade might stay where it is. And already this week, Chris, 260 in the cash trade.
I saw that Monday morning. They came out really hot. We've had a tremendous amount of news to take place in the markets, and it has created an immense amount of volatility. You and I were talking off camera just a little bit ago about how trying to stay in the middle of the lane sometimes might be the best way. And right now, it is just like going through a NASCAR car wreck. Best thing to do, I know, is just keep going straight ahead right there. And that is giving yourself some protection on either side. you may need to own some call options in corn to keep from the corn price going up. Doesn't mean that you're solidified to it. You just have the option to do it. You may need to put some marketing floors up underneath some cattle. Doesn't mean that it's going to go down or it's going to go up, but it keeps you in the middle of the road there when everything else is going from side to side.
Yeah, just, you know, looking at this market, yeah, you could try to play the highs all throughout here, but you know, you just look at that 210 mark up to 250 or so. There's just a straight line through there.
Oh,
if you're just driving straight through and not worrying about the headlines, you'll be okay?
I think so. It's because the headlines are going to continue. We see that in the energy markets. We've seen it in several other markets. The headlines are not going to go away. Our president likes to tweet things, and so every time he tweets something, there are algorithms that are attached to that, the keywords set the market off, and we're just probably not going to get away from that anytime soon. So give yourself a little bit of cushion. Don't go to bed at night wondering, is the car wreck going to come right after? And if I'm driving straight through, do I have a little bit of a cushion on either side of me?
Well, speaking of cars, that's crude. That's the last 6 months. If you'd have been trying to drive that line, it would have been around, you know, that $58 mark. And then suddenly it popped up. Is that one you really have to keep in mind? But it's got the chance to come down pretty quick.
Well, it does, but it also has a bigger chance of going up. So as we stated, it's in a pretty good uptrend right now, and the facts of the matter are nothing has been resolved overseas yet that caused this, and until that resolve comes, and when it does, it's going to plummet because there is no shortage of oil. There never has been a shortage of oil, so I'm really perplexed as how we're going to kind of get out of this. If we keep going higher, it's going to be brutal. If it turns around and goes lower, I think it's possible we could end up with negative crude oil again.
Wow. It's been a few years, hasn't it?
It has, but it still amazes me. We had so much crude oil, we were paying somebody to store it for us.
You know what? I'm going to invest in 55-gallon drums, and then I'll haul it over to Cushing, Oklahoma.
42-gallon drums.
Oh, well, I don't have
42-gallon drums.
42. There you go. It's Chris Swift, Swift Trading.
You never know what's going to happen. Thank you, guys.